I mean, look, I think there's a simple way to look at it, which is why are most retail participants in this industry? Pretty obviously to make money. The current token launch paradigm of like low float, high FDV, no public token sale, it just like totally kneecaps your ability to 100x on like VC tokens. We killed it. And not like, it's not all like the industry's fault, right? Obviously, the SEC has been incredibly hostile. Sure, we can blame financial nihilism and like macroeconomic conditions, or we can say like, what's different now than it was then? And it's just obvious, right? There are no more 100x's in these VC infra tokens.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic from 4RC. Today's show spotlights a conversation about what's so confusing this crypto bull run and how do we move forward. In this episode, we interview Regan Bozman, the co-founder of Lattice, about what's different this cycle, how do we learn from it, and what needs to happen for us to advance to the next phase of the bull run. But before we do, just a quick word from our sponsors who make the Edge Podcast possible. Power up your portfolio by borrowing, lending, and multiplying your favorite assets, made safe and easy by the industry-leading automation tools at SUMMER.FI. SUMMER.FI offers a curated DeFi experience to access the highest quality protocols and strategies. Discover new earn strategies for your portfolio in a user-friendly app designed to filter based on the tokens you hold, the networks you transact on, the protocols you trust, and the highest available yields. Learn more today at SUMMER.FI, the best place to borrow and earn in DeFi.
Introducing the MANTLE liquid staking protocol, MANTLE LSP, a permissionless, non-custodial ETH liquid staking protocol deployed on Ethereum L1 and governed by MANTLE. With MANTLE LSP, users can stake ETH to instantly receive METH. Earn yield and accumulate rewards the longer you stake. METH is the value accumulating receipt token that will give you access to expanded yield opportunities. Stake and watch your yield grow with MANTLE LSP.
Introducing Flat Money, the first decentralized delta-neutral flat coin built on Base with sustainable yield that's completely untethered from legacy finance. Because DeFi needs an uncensorable based unit of currency. You can mint unit with RETH, which is held in the protocol's shared liquidity pool, where it's borrowed by leveraged traders. As a leveraged trader, you can deposit your margin collateral and go long on RETH. If you're trading in the perpetual futures market, you'll pay unit holders to open leverage positions. If you're holding unit, you'll earn yield from liquidations, borrow rate, and trading fees. Preserve your purchasing power and offset your exposure to crypto market volatility. Learn more at flat.money. Tired of hopping between tabs, searching for new tokens before the hype catches on? Try MATCHA.XYZ, the DEX aggregator from 0x. Matcha connects hundreds of DEXs so you can trade millions of tokens and find fresh new drops. Matcha works out the best route to save you money on every trade. Swaps are free and Matcha has everything you need to trade on-chain. Gasless swaps, limit orders, and cross-chain, all in one place. Search Trade Done at matcha.xyz.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains in USDC. And native access to INSTADAPP's powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
All right, let's introduce Regan Bozman, who is the co-founder at Lattice. Regan, welcome to the Edge Podcast. How are you doing?
I'm doing great. Thanks for having me on.
Recently, I feel like you've had a lot of very candid, genuine threads on different topics that have been interesting to you this bull cycle. I think some of the tweets I've resonated with the most have been expressing just mistakes, regret, things that you've missed. And so we're going to try to cover some of that because I think it informs us about how we want to move forward in this bull cycle, and maybe what are some of the lessons to take from all of that. So why don't we talk a little bit more, though, about Lattice and your background. You started out at CoinList, which is fascinating. So just anything you can share about the highlights reel of all the cool stuff you've worked on over the years.
Yeah, absolutely. So my kind of journey into crypto starts in 2016. I moved out to San Francisco and was working on the ventures team at AngelList. And a lot of kind of the crew there, like Naval Ravikant was running the company then, there was like a lot of excitement about crypto. And then about a year and a half later, we spun out CoinList to kind of build a similar business around capital formation in crypto. Kind of the FLATCOIN token sale was like the launch of CoinList. And so I was the first employee to jump over and spent about 4 years there running the token sales business. So we helped launch like Solana, Near, Blockstack, Celo, Flow, a lot of the largest L1 blockchains today. I started doing some personal investing there. So small angel checks, was fortunate to meet like the OpenSea guys really early on, the Dune guys, and then plenty of like terrible investments I generally don't talk about. And then kind of in the tail end of CoinList, helped launch this fundraising data business called DevMetrics. And so the idea was like, in traditional venture, you had Crunchbase, which just gave you like a very accurate database of all the fundraising events that happened. Nothing like that exists in crypto. And so helped launch that. And then we sold it to Masari about 2 years ago. And kind of at the same time was building DevMetrics after I left CoinList. Helped start Lattice with my co-founder, Mike Zyko, who I'd worked with at CoinList. Our thesis at Lattice is like we want to invest in products we think can expand the market. So that could be an application that gets a new audience excited about crypto, earning crypto, buying crypto, or infrastructure that powers those applications. So an example of like the latter would be something like Privy. An example of the former would be, Galaxy and Layer 3, which are like two of the largest kind of like discovery platforms in crypto, or both portfolio companies. We've invested in a bunch of DePIN companies kind of with that thesis. Yeah.
Regan, would like to just kind of hear what the vibe is of crypto in San Fran right now. I know like if you track the All In podcast bros, they said crypto was dead in America at one point. Now they're all bullish. But yeah, just curious like what it is. What's the lay of the land on the ground there?
Yeah, those guys. I find like, the internet opinion of San Francisco, the way I always think about it is a little bit like Yelp reviews, right? It's like, if I'm just like having a great day in San Francisco, the weather's awesome, I go to my office, I have lunch, I'm not like tweeting about it on the internet, right? And I think that's like the vast majority of people's experiences in San Francisco. But then these like, Miami, this, California's dead, blah, blah, blah. The people with very loud opinions, I think kind of tend to dominate the discourse around it a little bit, like the 1-star Yelp reviews on like, it's like, someone at a dive bar complaining about how the bathroom's dirty. It's like, what do you expect? So I'm a huge fan of San Francisco. I think like, this was the OG hub for crypto, right? Like Polychain, Paradigm, Coinbase, a lot of like the large companies from last cycle were all based here. New York has definitely overtaken SF as like the largest, most dense crypto scene in the US. But San Francisco is definitely the second biggest. I don't think any of these kind of like rising cities like Miami or Austin, I would argue are probably even less than 10% of the size of San Francisco's scene. There's a new wave of like deep infrastructure companies here like Succinct and Argus. A lot of the Aptos and Sui team are based in the Bay Area, and a lot of crypto funds, Pantera, Framework, Blockchain Capital, like Bain, like they all have offices here. So I think the perception of the scene is definitely below where it actually is. It's definitely a little bit like fragmented. Like I feel like in New York, there's like happy hours of these VC offices every week. That doesn't exist here yet. But I'm hosting something on Thursday, and so I'm trying to play whatever small part I can in like bringing people back together. But I don't know. Yeah, I definitely always like whenever I'm at an event, I see all these people, and I'm like, oh, like I forgot you lived here. I don't know. There's like a very good scene, but it's just like a little bit disjointed.
So when I was new to crypto, I remember that when I would listen to like an investor like yourself, I was just trying to gather as much background as I could from them, knowing that they had seen multiple cycles, that they had like a better pattern recognition for what was happening. Obviously, when you're new, it's all new, unless you're coming from like, let's say, traditional finance and you recognize, some of the facets of your old industry. So I think before we talk about like what needs to happen for us to move forward into this like next phase of the bull cycle, I'm curious if you could talk about like what has been predictable this cycle, maybe like what's happened where you're like, all right, cool, like that's what we expect to see in a crypto bull run. And then I'd love to, of course, talk about what's caught you off guard, what's been different this cycle.
So I think Bitcoin leading the charge in retrospect was kind of obvious, right? Like the real catalyst was sort of like this perception changing around the Bitcoin ETF, probably was mid-November. I think the other thing that, you look back at like what catalyzes a bull run, and a lot of times it's a new form of speculation. You had like ICOs in 2017 as an example. We didn't really have that here, but we had these two really big airdrops in Solana with ETH and Jito, and I think it was mid-November as well. And so that kind of I think was a catalyst that people didn't really expect. But now looking back in retrospect, right, that kind of helped recatalyze the Solana ecosystem, and maybe it's not surprising that that's driven that as a cycle leader. I think what's been surprising to some people is just a lot of the kind of VC infrastructure darlings have underperformed. And I think there's kind of a few camps of that. One is something like Atom, where I think just I don't know, people have tried to make it happen. What's that Mean Girl quote? Stop trying to make fetch happen. It's okay, Atom's not going to happen. We should just write it off. And then the other category is things like ARB and Optimism, where, the tokens launched somewhere between 18 and 24 months ago. And you just have these huge unlocks and a ton of sell pressure. And so despite, I think, both of those ecosystems actually doing really well, there was just a supply-demand mismatch on the token. And so that bucket of infra things has also underperformed.
Regan, you mentioned infrastructure sort of underperforming, the classic infrastructure darling that we can always kind of hang our hat and bet on. Maybe that's going away, but maybe it's not. Something I want to get your take on is just this infrastructure versus consumer crypto. It's not that they need to be pinned against each other, but I feel like that's kind of what the crypto Twitter community likes to do with everything. So naturally, that's what's occurred. But maybe if you can give us your take on what consumer crypto is, and then is it time for the apps to shine?
So consumer crypto is an interesting category because I feel like a lot of things in DeFi are consumer facing, right? Is Uniswap a protocol? Is it a front end? Most DeFi category leaders, they have user-facing front ends, and a lot of their volume comes from that. The same in NFTs, right? Is Blur consumer crypto, or is it NFTs? I'd argue it's kind of both. I think that consumer crypto, I would just say, is anything that has a front end that people interact with. And I think that the category has gotten a lot more exciting just because we've seen a lot more innovation this cycle, right? I think last cycle we had a lot of games and those are cool, but I don't know, that was kind of the main show in town. And now you have all of these SocialFi experiments, you have non-financialized experiments like Forecaster, and you just have a lot of energy and excitement around this category, which I think is awesome. I think to me, the biggest question is just how valuable can these things get? The kind of most valuable consumer thing to date has been ENS, which is probably 3 billion today, maybe 2.5 FTV. And there's kind of been this pretty clear correlation where like the further you are down the stack, like the higher the FTV you are, right? Whereas like you start with like L1s at 100 billion and you go down to like friend tech at 100 million. And so I think to me, the main question of this cycle is like, can some consumer facing things flip infrastructure? And I think it can. And I think like what we're seeing that's interesting is like the flagship consumer apps are like starting to vertically integrate and just like roll their own infrastructure. So I think the first team to really do this was Blur, where like they wanted to launch this NFT perps exchange. They needed a high throughput blockchain. They easily could have like deployed on ARB or OP and probably gotten like a 10-figure grant from either of those teams. But they're like, well, like why? Like we have all the users, right? We have the brand. Why are we going to give the sequencer fees and all of this stuff to like another team? We're just going to do it ourselves. And, you know, now, I mean, Blast, like unclear where the token will net out, but like they've built a pretty big ecosystem around that. We've seen some teams in our portfolio, like Cyber, which is one of the largest social protocols, Galaxy, which is probably like the largest user acquisition and discovery platform in crypto today. These teams that really have like proprietary distribution and brand are starting to roll their own infrastructure. And so I think like this is at least one path to consumer facing things kind of flippening pure infra plays. But I think there's like infra versus app or like infra being dead. I think it's a little bit overplayed because like clearly things like Athena that are novel like have done really well. And Optimism and Arbitrum are still worth over $10 billion, right? Like it's not like these things have shrunk to like a tiny size. But I think really the issue is just like these tokens don't die and like more tokens are launched every month. And so it's just like, it's kind of definitionally like harder and harder to compete as, you know, the cycle goes on.
Catch the tide of the mainnet launch of Puffer Finance. Whether you're an Ethereum staker or an aspiring node operator, Puffer delivers the decentralization revolution with its cutting-edge technology. Start with just 2 ETH to unlock the potential of native liquid restaking and maximize your earnings. Join the movement now and anchor your stake at Puffer.FI. How do you think about like some of these major sectors that we're all invested in? Let's think about just DeFi for a moment. How do you think about that juxtaposed against all of the talk of this nihilism, this cycle? This is one thing that I don't post about it much on Twitter, but I'm betting that this will be one of those like fads that we'll look back on and say, oh yeah, that cycle. Remember at some point there was this talk that no one cares anymore about real utility. No one cares about building anything that is more innovative. It's just let's just gamble, make money. There's no real utility, in other words, to crypto. Whereas last cycle, obviously because DeFi became, so popular that there was like kind of a hope among everyone from retail to crypto institutional investors. Everyone saw that this was a killer use case finally for crypto, that we could see like more mature users actually moving on chain. And I think the expectations at that time, they got ahead of the reality of where DeFi actually was. This cycle, it's like the complete opposite where, I hear people just proudly saying there's no real purpose to any of this. It's just meme coins. Everything's a meme. Bitcoin's is a meme, you could argue, and that's the future. Nothing will ever be built with any sort of like real value in the future. So anyways, I've been clearly wrestling with this quite a bit. I'm curious, like, how do you see that as someone who's investing full time?
So I think it's like the topic du jour. I mean, look, I think there's a simple way to look at it, which is why are most retail participants in this industry? Pretty obviously to make money, right? And the current token launch paradigm of like low float, high FTV, no public token sale, it just like totally kneecaps your ability to 100x on like VC tokens, right? You look at like the Solana ICO from like that sale price, which was 22 cents, and anyone besides us lucky Americans, could participate. That's like a 650x to where it is today. Whereas like, what's like a good example from this cycle? I don't know, like Eigenlayer. What was like the max you could make on like the points thing? Maybe a 2x, right? It's just like, we killed this. And not like, it's not all like the industry's fault, right? Obviously the SEC has been incredibly hostile, and like there are real risks for doing public sales, but like I think we need to like, sure, we can blame financial nihilism and like macroeconomic conditions, or we can say like what's different now than it was then. And it's just obvious, right? There are no more 100x's in these VC infra tokens. That's it. And so if you just like distill down why people are here, people want to make money, right? So I think like the financial nihilism thing is almost to me kind of like a sideshow. It's just like people want to make money, and there's 100x's in meme coins. So that's where attention is gone. Now, like, yes, I think there probably is some backdrop of financial nihilism, and Travis Kling, I think, has kind of been like the most articulate in advancing this thesis. And like, you look at like gambling statistics and parlays and like kind of other ways for people to try to 100x money, and those are clearly on the rise, right? So like, I think there is something there. But to me, it's actually just like really simple that like we kind of kneecapped, retail's ability to make a bunch of money on VC tokens, and meme coins are like, it's like the store next door, right? It's right there. It's fast in Solana. It's cheap. That's like, if all you're trying to do is make money, that's like the purest way to express that bet. So I don't think it's surprising at all. Now I'm hopeful that like we can kind of like move past this and figure out new ways to give early communities upside. It's not necessarily an easy problem because you do have these like thorny regulatory issues, but to me, like just the points campaign airdrop is like the only way to get these tokens at like a reasonable valuation. It is just so obviously a stupid way to launch these protocols.
I think if you're long crypto, like if you're someone who's been around, let's say for 5 years or plans to be around at least another 5 years, you really do start to appreciate like just how far we've come this cycle. And so I think to kind of marry what I was saying earlier with what you just said, I have multiple times just gotten excited about the fact that people are able to trade meme coins so easily. Like last cycle, we didn't have reliable bridges. We didn't have easy on-ramps and off-ramps like we do with like a Coinbase. It had gotten better from the previous cycle, but now we're at a point like, I know I can off-ramp from like a USDC to dollars in my bank if I need to, literally within like 8 hours. It's unreal how fast that's gotten.
Yeah, and Phantom is a really good experience. Jupiter is a really good DEX. Like, meme coins are like, you can say that they're silly, right? But like the fact that we can trade these things quickly, cheaply, reliably, like that's built on a lot of years of like infrastructure work.
Right. And so I think people sometimes lose sight of like the fact that we have a wallet like Phantom now that is so reliable from a mobile standpoint. I mean, I use one of my really good friends who is a guitar teacher. Last cycle, he was trying to set up MetaMask for the first time. And this is someone who's like, he's like a great example of like retail who has just bought and held something like Ether, Bitcoin. He keeps it really simple. But last cycle, he wanted to buy just a few newer altcoins. And I think one of them was Floki. He tried to buy Floki on Ethereum mainnet at the time. And I believe he lost about $200 to a failed transaction because the gas was so high. This cycle, he's able to transact now on L2s. He's able to transact on Solana and other L1s. And, I look at that and I think, God, there's so much progress there. if the end result is people being able to freely trade whatever they want, whenever they want, I'm like, guys, that was the vision for DeFi all along. It's just that we're still in a less mature place. Like, we just don't have like the trillions of dollars of liquidity that will be there eventually. Right now, it looks silly to our friends in TradFi who say, I can't believe you guys are trading these, like, all the different like meme coins with all the goofy names out there.
Yeah, well, it's like I feel like crypto gets less stupid every cycle, but at the same time, it's like traditional markets have gotten way dumber over like the last few years. So it's like, crypto to kind of get at par with like traditional markets. Like, I feel like it's like a little bit of an easier lift than it was a few years ago.
Guys, while we're here just on meme coins, I'd love to get your take, Regan, just on the celebrity meme coin meta that's currently happening right now with, Iggy Azalea came in and dropped Mother token.
Yeah, what a wild... I was kind of following this over the weekend a bit. It seems like she just like kind of nailed it. She could like make fun of herself on Twitter, and she's like calling people like she's done a really good job. Yeah, I mean, look, I think meme coins are like a way to monetize attention, and like if you're a celebrity, you have attention, and if you can like kind of use your distribution and like soapbox to drive volume on a meme coin, that's something you can do. I don't think the celebrity ones are the most interesting. To me, like the like event ones are more interesting. Like, I think Bowden, Trump, some of the country ones around the Euros and now like the Olympics. I think to me those are the most interesting, in that they kind of like almost play at these like societal metas, and are just like pretty interesting ways to bet on kind of like larger macro events.
Regan, switching gears here a bit, what are some sectors that you're particularly bullish on, either personally or through Lattice right now?
Yeah, so one of the areas we've been most active in is DePIN. So for anyone who's not familiar, it's the idea of like decentralized physical infrastructure networks. Basically, networks where you're like subsidizing the supply side of the network through a token distribution. So you think back to kind of like the 2010s and these really big two-sided marketplaces like Uber. The way they tended to build out the supply, because you can't take a ride in an Uber if there's no drivers. You kind of need to build out supply ahead of demand. They would raise hundreds of millions of dollars in venture funding. It kind of created all these like weird side effects. But Helium was kind of the first model where it was like, hey, like, what if we could just basically give people equity in the network in order to incentivize the rollout? And that's both more capital efficient, and then we don't need to raise as much venture funding, and early network participants get upside as this grows. And so we've now seen this model applied to a bunch of other categories. Demo, which is a portfolio company of Lattice, is doing this for car data. We've seen Grass doing this for proxy re-encryption, basically like sharing your bandwidth. And we've kind of seen this model applied to a bunch of other categories. So I think one of the things that gets us most excited is, you talk to early participants in these networks, and they tend to not be like crypto people. Like a lot of the early demo users, they were car nerds who just wanted to like see real-time data on their car. And earning tokens and kind of contributing to this marketplace was almost like the icing on the cake. So I think like we're starting to see a lot more eyeballs on DePIN, and yeah, I think it's just like, it's one of the more novel applications of crypto.
Teller is a decentralized protocol that enables anyone to borrow or lend using any Ethereum asset. You can think of a Teller loan as a DeFi cash advance, one where you can use any of your favorite ERC20 tokens as collateral to get an instant USDC loan. Discover the power of a DeFi cash advance today at Teller.org.
DeFi enables a whole new world of trading and yield opportunities. Sometimes we all wish we had a little bit bigger of a budget so we can make the most out of it. That's why we created Blueberry. Blueberry lets you access the best opportunities on Ethereum all in one easy-to-use terminal. You can access 5x, 10x, or even 20x your money in one click, more than any other lending market, so you can maximize your earnings. Only on Blueberry.
Regan, I saw a tweet recently. It was kind of like your musings on consensus. And one of the things you talked about, I think is like your colleague, Mike Zajko. I don't know if I'm getting his name correct, but Zyko, there you go. Just kind of talking about what needs to happen to get this next phase of the bull run started. And in the tweet, you basically say we need one new consumer app to kind of go crazy, like on an Axie, STEPN, Helium scale, or Bitcoin to 100K or ETH to 10K. Kind of just curious your take on that. What do you think needs to happen to, grab that attention and get, stories on CNBC again, get Jim Cramer talking about it again? Yeah, but I think there's kind of two paths that can easily happen in parallel. I mean, last cycle, right, you had like a few applications that broke out to the extent like that they were getting covered in the New York Times, right? So you had this whole Axie meta and then all this other play to earn stuff where it was like, hey, holy shit, like a bunch of people in the Philippines are making real money doing this. Now, obviously that kind of came back down to earth, but then like you also had like STEPN. I remember like telling my wife about it and having like, she was excited and there's like random friends were like using STEPN. And Helium kind of similarly were just like a lot of people got really excited about putting in one of these miners and these things all like got mainstream press coverage and it just creates a positive flywheel, right? Where like more people get excited. So I think that's like one path forward to kind of breaking out of like the early innings of the cycle where I think we are. And maybe that's Farcaster, maybe that's Grass, maybe that's honestly probably something I don't even know what it is right now. And someone will figure out something fun and they'll figure out like the incentive or the gamification and this thing just rockets. And that's like one catalyst that I think would get us like more, that would create further progress in this cycle. I think the other is just like macro conditions, right? Like crypto is insanely reflexive. The price goes up and more people talk about it and more people buy it, and so the price goes higher. And whenever we crossed Bitcoin all-time highs after the ETF, I think it was like mid-Feb, it felt like no one was really talking about it. Like none of my friends were talking about it. It didn't get a ton of like mainstream press coverage. And so I think, whatever number we hit, 72K, 73K, it's not that different than, I think it was 68 was the prior all-time high. But 100 is obviously a round number. It's a big number. And so I think that is a pretty clear, that would be a real catalyst. The same with ETH. I mean, even breaking all-time highs again that'd be nice. I'm sure you guys, I'm overexposed to ETH. But I think 10K there, that would be okay, that's a big number. That's double prior all-time highs. That Jim Cramer is talking about that. So my hope and I think my belief is that those two things happen in parallel, but I feel that's really what we need to just drive interest back into the space.
Yeah, this cycle, when I think about a few of the things that clearly catalyzed the next wave of attention coming into the space, I give credit to Jito. That totally caught me off guard because it was an airdrop that rewarded a lot of folks who were clearly very loyal to Solana. Solana had not really returned to its glory days. I mean, it really had been had been pronounced dead many times in 2022 and 2023. So I give credit to them. I think the Bitcoin ETF, that was just such a watershed moment for the industry. And if you recall, the market sold off pretty hard right after it got approved. It had clearly been priced in. So what I'm wondering is the ETH ETF getting approved, as someone, a fellow longtime bag holder of ETH, overweighted in ETH myself, it really caught me off guard. I know there's a lot of people dancing and saying, we called it all along. I'm no, I gave it a 5 or 10% approval chance. So
No, I feel like that was the popular perception was like it was DOA, and then within like a 48-hour span, it was like those Bloomberg ETF analysts were like, "Hey, actually, like this is going to happen," and then it did, right? And I mean, clearly the market wasn't expecting it because ETH added what $80 billion in market value in a day. Like I think it was the largest gain ever.
So based on the excitement of the ETH ETF, do you think that the impact of that is potentially underweighted? Like, I'm thinking what you said about there's probably something that we'll be all really excited about, some sort of consumer-related app that we just don't know about yet. And that is what will propel us into that next phase of the bull run. But I am thinking that the ETH ETF, like that's something that caught everyone off guard. It's huge. And once we start to see money actually flow into that, gosh, it's gotta start to have some like impact on all different parts of the crypto space. But yeah, any other thoughts on the ETH ETF's impact?
I mean, I think there's like a pessimistic way to look at it, which is like if you just comp like the ETH futures ETF versus like the Bitcoin futures ETF, it's a fraction of the volume. So I don't know. I think that there's been about 14 billion in inflows into the Bitcoin ETF. So I think like you could make a reasonable argument that's like, okay, there's going to be like 1.4 into the ETH ETF, which for a $400 billion asset, it's not like that much. But I think there's a positive way to look at it, which is generally what I believe, which is like ETH is such an interesting asset, right? You have this like, you have staking yield one, and then you kind of have this it's not deflationary today, but it theoretically could be with fees, right? And has been at times. You have this kind of like more cash flow. It just looks like more like an equity if you're trying to like do like a DCF or something like that. So I think my optimism is like, who covers ETFs, right? It's like people in finance. And I think like there's a lot of really interesting angles to look at ETH from that lens. So I think you can make an argument that like more money comes into this ETF because it gets more coverage than we expect, which, you know, again, talking my bags here, but let's just say that like that's what's going to happen.
I think a part of our goal with the podcast, though, is it's to talk about what's not getting the spotlight. You know, like we love everything that Uniswap puts out, but like they get enough coverage, and so we try to cover like the new bleeding edge protocols, bleeding edge ideas. And one thing about ETH, which I would have never expected, just because it is such a mature crypto asset in comparison to everything else other than Bitcoin, I do think that this cycle, there is still some edge to understanding what Ethereum is as a platform, what it enables. And I saw there was a tweet that we should flash up on screen here later in editing from someone posting about all these like well-known figures in traditional finance, you know, like a Ray Dalio or Druckenmiller and even like a Jamie Dimon, like some of the very positive things that have been said. Clearly, some of them are holding ETH. Some of them are just expressing like a genuine interest in it. And I'm like, hey, if I still got time to have that edge, to understand ETH as an asset, to understand Sol as an asset, being like probably the third most mature, you know, crypto asset, that's exciting. Because I know it always feels like, you know, when you've been through like multiple bull to bear cycles, you know, you start to lament the fact that there's just not the same sort of volatility there once was. I think to your point with, you know, high FDV launches, we don't see the same sort of upside for retail, and that sort of dampens interest and dampens volatility. And just, yeah, it's just not the same. So, yeah, I think it's exciting that we've still got like some edge, pun intended, to gain this cycle.
I hope so. I think we do. Like, I think there's a lot of reasons to be excited, and I generally like am in the view that we're still early days, both broadly, but also, you know, within this cycle.
Regan, I think this is a great place for us to start to wrap up. So I want to remind our listeners that they can learn more about Lattice at lattice.fund. They can find that in our show notes. They should follow you on Twitter at Regan Bozman, so that just his full name. And then Lattice_fund is the Twitter handle for the Lattice team. Regan, thanks so much for joining us. If you could just take us out with one last word on like maybe how can folks get in touch with you? How can they learn more about some of the work you do as an investor at Lattice? Any other sort of like call to action?
Yeah, my Twitter DMs are open, and always happy to chat there. But yeah, really appreciate you guys having me on.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.